How to Calculate the Intrinsic Value of a Stock by Warren Buffett. Hello and welcome back to Wealth-ology. And today's video will show you the clips of Warren Buffett's talking about calculating the intrinsic value of a stock. Are you ready? Let's get started. This is a question about intrinsic value, and it's a question for both of you because you have written that perhaps you would come up with different answers. You write and speak a great deal about intrinsic value, and you indicate that you try to give shareholders the tools in the annual report so they can come to their own determination. What I'd like you to do is expand upon that a little bit. First of all, what do you believe to be the important tools either in the Berkshire annual reports or other annual reports that you review in determining intrinsic value? Secondly, what rules or principles or standards do you use in applying those tools? And lastly, how does that process that is the use of the tools, the application of the standards relate to what you have previously described as the filters you use in determining your valuation of a company? If we could see in it looking at any business what its future cash inflows or outflows from the business to the owners or from the owners would be over the next, we'll call it 100 years or until the business is extinct, and they could discount that back at the appropriate interest rate, which I'll get to in a second. That would give us a number of intrinsic value. In other words, it would be like looking at a bond that had a whole bunch of coupons on it that was doing 100 years, and if you could see it, what those coupons are, you can figure the value of that bond compared to government bonds. If you want to stick an appropriate risk rate, and or you can compare one government bond with the 5% coupons to another government bond with 7% coupons. Each one of those bonds has a different value because they have different coupons printed on them. Businesses have coupons that are going to develop in the future too. The only problem is they aren't printed on the instrument, and it's up to the investor to try to estimate what those coupons are going to be over time. And as we have said, in high-tech businesses or something like that, we don't have a fantastic idea what the coupons are going to be. When we get into businesses where we think we can understand them reasonably well, we are trying to print the coupons that we were trying to figure out what businesses are going to be worth in 10 or 20 years. When we bought See's Candy in 1972, we had to come to the judgment as to whether we could figure out the competitive forces that would operate the strength and weaknesses of the company and how that would look over a 10 or 20 or 30-year period. And if you attempt to assess intrinsic value, it all relates to cash flows. The only reason for putting cash into any kind of investment now is because you expect to take cash out, not by selling it to somebody else, because that's just a game of who beats who, but by that the asset itself produces. That's truly if you're buying a farm. It's true if you're buying a business. And the filters you described were there. Their number of filters which say to us we don't know what the business is gonna be worth in 10 or 20 years. And we can't even make an educated guess. Obviously, we don't think we know 2 decimal places or 2 decimal places or anything what like that was precisely what's going to be produced, but we have a high degree of confidence that we are in the ballpark with certain kinds of businesses. The filters are designed to make sure we are in those kinds of businesses. We basically use long-term risk-free, that's government bond type, interest rates to think back in terms of what we should discount at. And that's what the game of investment is all about. Investment is putting out money to get more money back from later on, from the asset, and not by selling it to somebody else, but by what the asset itself will produce. If you're an investor, you're looking at what the asset is going to do. In our case, businesses. If you're a spectacular, you're primarily focusing on what the price of the object is going to do, independent of the business, and that's not our game. So we figure if we're right about business, we're gonna make a lot of money. If we're not wrong, and if we're wrong about the business, we don't have any hopes. We don't expect to make money. And in looking at Berkshire, we try to tell you as much as possible as we can about our business of the key factors. Those are the things that Charlie on. What the things we put in our report about those businesses and the things that we look at ourselves. So if Charlie had nothing to do with Berkshire, but he looked at our report, he would probably, in my view, he would come to pretty much the same idea of intrinsic value that he would come to from being around it. For X number of years, the information should be there. We give you the information that if the position were reversed, we would want to get from you. And in companies like Coca-Cola or Gillette or Disney or those kinds of businesses, you will see the information in the reports. You have to have some understanding of what they're doing. But you have that in your everyday activities. You'll get that kind of knowledge. Yeah, you won't get it, in terms of some high-tech company, but you'll get it with those kinds of companies. And then you sit down and you try to print out the future. So these are the most important factors to consider when assessing a company's intrinsic worth. Concentrate on the business's future cash flows while purchasing it. How much money will this business generate in the future for you? Then figure out how much those earnings are worth now in terms of cash flow. You don't need an exact value. Just a ballpark figure would suffice. As Warren Buffett famously quoted, "It is better to be approximately right, being precisely wrong." And what you want to do is concentrate on the firms that are more solid and for which you have a better sense of future earnings. Some enterprises are simply too difficult to estimate their worth. So, how do Warren Buffett's investment tips influence you? Which of Warren Buffett's suggestions do you believe will be the most beneficial for you? Please let me know in the comment section below. And if you like this video, please give it a thumbs up, turn on the notification bell, and subscribe to our channel for more. Thank you for taking the time to watch. Stay tuned for our next video.